Are home prices becoming too expensive? The median home price in America hit a whopping $412,156 in March of 2022. Now that was up 17% compared to March of last year. And that correlated with a rent increase of about 70% year over year and an increase in the average mortgage payment, which rose a nosebleed inducing 34%. These numbers are staggering, and that begs the question, is it becoming too expensive to own a home in America? We're going to explore that in this video. Right after introductions, of course. I'm Derek West, host of this channel, Finance Squared, where we explore all kinds of topics on the subject of personal finance, including home ownership, stock markets, crypto markets, and everything in between. Be sure to lovingly, tenderly, yet ever so gently, smash that like button for the YouTube algorithm, and subscribe with post notifications turned on for more great content, just like this. Let's start off with just the facts, to help to ground us in the reality of the current housing market in the United States, as opposed to, say, Latvia in the middle of Europe. According to Redfin, linked in the description, of course, for the 4-week period ending April 17th, the median home price of homes was up 17.1% year over year. The median asking price of newly listed homes increased 14% year over year to $399,225. The monthly mortgage payment on the median asking price home, that rose to a record high of $2,318 at the current 5.11% mortgage rate, which was up 38% from a year earlier when mortgage rates were 2.97%. Pending home sales were down 2% year over year, and new listings of homes for sale were down 8% from a year earlier, making it the 22nd straight annual decline and the biggest drop since early February. Active listings, meaning the number of homes listed for sale at any point during the period. Well, it ended in April 17th, and that number fell 21% year over year. A record 58% of homes that went under contract had an accepted offer within the first 2 weeks on the market, which was up 54% from a year earlier. A record 44% of homes that went under contract had an accepted offer within 1 week of hitting the market. Homes that sold were on the market for a median of 17 days, down from 24 days a year earlier. A record 54% of homes sold above list price. So more than half of all homes sold in the United States were sold above their listing price. All of these numbers help to increase the resolution, or enhance the clarity on a phenomenon, or the big picture as it were, that is becoming more and more apparent. Owning a home in the United States is becoming increasingly expensive, even in areas outside the large metro regions of the United States, like New York or Los Angeles. In fact, the top 10 metros with the fastest growing home sales, well, they all were located in Florida or Tennessee, with one lone holdout in Irvine, California. Now, what's driving this trend? As with many other phenomena, it's a combination of many things. Among those reasons is restricted supply. A common theme you see in many markets is that housing supply is just low all over the place. A good example is in Florida, particularly in the Miami region, where real estate experts that are local to that market, well, they're saying that the number of people moving from other regions means that the competition for the homes that are available is fierce. An article from Business Insider gives us an interesting perspective from a vice president from a real estate sales firm, Compass, Florida. Their VP of sales, Elizabeth Holmes, in her area, there are many clients that are interested in buying properties. The fact is there simply aren't enough homes for all of them, and this includes wealthy individuals. The real estate investing database Million Acres, well, they calculated that the median home price rose 20% year over year, while at the same time, the amount of homes available for sale fell 54.2%. So what is with the home supply glut? With so much demand, you'd think there would be people clamoring to build a supply. Well, even the supply that is being built is tending to be more expensive. People's taste in houses has evolved to where the most expensive types of houses are the most desirable, particularly for new builds. New houses being built with the latest amenities such as granite countertops, vaulted ceilings, in-ground pools, heated in-ground pools, floor-to-ceiling windows, multiple bedrooms, and on and on and on. The new supply of newly minted houses that are being created, well, they're being catered towards the higher end of the income spectrum. In addition to that, older homes, those being built from the late 80s to the 2010s, they're being snapped up by investors and rented out instead of being resold. Because right now, rental housing is all the rage among little mom and pop investors. Think folks like Grant Cardone and Graham Stephan. But it also includes bigger powerhouse investment firms like BlackRock. All these phenomenons altogether are driving housing costs through the roof. But that's not the only thing. Another large reason why housing is becoming so expensive is that individuals who used to live in very expensive places like Los Angeles, San Francisco, New York, Austin, well, they're moving to places that are not as expensive, and they're pocketing the difference. Think of one of the internet's most favorite side hustles over the last couple of years, drop shipping. That's when you take something you found on a website, typically from a place where your core audience wouldn't be looking. The most common example is AliExpress. You then take that product and mark it up for an audience that wouldn't otherwise, well, they wouldn't have seen it, but nevertheless they're interested in buying. That's a form of arbitrage, where arbitrage is exploring the differences in prices between one or more markets. What home buyers from Los Angeles, New York, and Austin, what they're doing is they're finding the same or similar housing in markets that are much cheaper and competing on price with locals who in many cases are only used to competing with folks in their current economic market. And because the folks in the expensive markets are used to paying higher prices, they probably have real estate already that is much more expensive than what they're looking to purchase in the cheaper locale. So in many cases, they're in a better position to have their finances all lined up for the house that they want. Think about people buying in all cash. Well, that's what you get when you have arbitrage power from bigger and more expensive markets to less expensive markets. And then there's pandemic purchasing power. You see, arbitrage buying, well, the trend has only gotten worse ever since the pandemic. The pandemic accelerated a trend that was already in the works, but wasn't quite mainstream. That trend is people working from home, particularly for high value jobs. I can attest to this trend personally, as I know of an office that was expanding and hiring new folks all the time. And one of their main challenges was finding a place to fit all their workers. Then, boom, once the pandemic hit, that same company migrated all of their workers to work from home. And all of a sudden, they had way more office space than they were going to need. And not only that, their workers could choose to work from just about anywhere in the country. Now, it is true that we are transitioning into a post-pandemic mindset, and many companies are in the processes of bringing their workers back into the office. But the trend is still present. Even with companies that are bringing their workforces back into the office, the jobs that tend to need to be at the office, unfortunately, they tend to have lower skill requirements. Think of a barista or a janitor. Those type of jobs typically pay less than a software engineer or a digital marketing expert. And your digital marketer or software engineer, well, they're more likely to be granted work from home privileges, giving them the freedom to live wherever they want. This further exacerbates the phenomenon that I described earlier, of people exploiting the differences in prices of their housing markets. A software engineer making $120,000 a year, competing with a janitor or security guard making $40,000 a year, those two people competing for a house in rural Ohio is going to go to the software engineer every time. And I haven't even brought up everyone's favorite economic phenomenon, inflation. Inflation has no doubt affected the price of housing. The thing is, it hasn't done all the damage it's going to do yet. The other phenomenon that I discussed are currently driving the cost up without even taking inflation into account. So expect housing prices to increase even more than they are now. But the good thing about inflation is that it tends to drive up costs generally for the entire population, because inflation is more about the money supply outpacing the numbers of goods and services available in any market at any one time. And the printing presses firing uncontrollably for the last 3 to 4 years has ensured that we will be dealing with inflation for at least the next 5 years. The Federal Reserve has recently realized this phenomenon is not good, but it might be a little bit of a case of too little, too late. And no matter what they do, the resulting actions are likely going to lead to a recession, which could be doom for the political fortunes of some Washington power players, who shall remain nameless because this is a finance channel, and I know you're not interested in my political opinion. Now, is there hope? Hope springs eternal, my friend. We are going through a period of transition in the economy, where prices are being driven up by natural forces that will once again have to come back down to earth. For example, when home builders and other construction types, when they see that there is a fortune to be made building affordable housing, or housing in general, in many of these areas, where it's traditionally less expensive to build, outside of LA and New York, there's going to be a boom in home building of all kinds. More than likely, there'll be a bubble that will burst in epic proportion, which will further bring down housing costs, so that the average American can get their piece of the American dream. Now, you need to get your piece of the American dream by being in the know of all the tricks of the trade to transition yourself from wherever you are in your financial life to a better place in your financial life. How can you do that, you may ask? Well, you can start by subscribing to high quality financial information and entertainment. And this channel is a good place to start as any, where we bring the heat at all times, keeping you informed on stocks, real estate, crypto, and everyone's favorite economic phenomenon, inflation. Be sure to share this video with your financial savvy compatriots, and even those who just don't have a clue. And of course, like the video if you liked the video. And remember, a goal without a plan is a wish. A goal with a plan and no action, well, that's just a wish list. I'll catch you guys in the next video. Peace.